Greetings, Dr. Jeffrey Scott. Happy Sunday. It is August 3rd, 2025, and this is part two of my weekend market update. For the more in-depth analysis of markets from a top-down perspective, please take a look at my video done on Friday the 1st entitled Bad Earnings, Tariff Tantrums, Weak Employment, Bad Seasonality in Russia. Did the wall of worry get too high to climb? So now as we go into after 6 on Sunday, the futures are out and they're down. I'll even use the word minimally at this point. The big question is where they're going to go. Gold is up, Bitcoin's up, and then for the most part, the futures are red, but they're red in not horrible numbers down. So I'll just leave it at that right now because it's early. 26 down on the NASDAQ, the Dow 15, the S&P 4, and the Russell somewhere in there. Russell's down a little bit as well. Actually, Russell was up 1.3, my bad. So will they buy the dip? My name again, Jeffrey Scott, marketmripro@gmail.com is my email address. Google group is called Top Down Trader. Please think about joining. It's free. More about that in a few minutes. As always, these are for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. Remember, I am an oncologist, a cancer doctor. I am not a financial advisor. And I've got tools in multiple platforms. I'm using my Market MRI Pro freestanding tool on this video. If, for example, you're looking for my wealth charts video, I'll be doing that in a little while, and it'll get posted at stocksanddocs.com before the market opens on Monday. Google Group, Top Down Trader, just go to Google Groups, go to all groups, search for Top Down Trader, and then let me know how you want to be notified. Why should you do it? It's free. I'll give you discounts on my products. I will invite you to Google Group member only educational sessions, and you'll get an email when I post a video so you don't have to wonder. You can always quit. It's free, and plus you get discounts. So why not? Speaking of meetings, my meeting is booked October 27th and 28th at Marriott Palm Beach Gardens off the PGA and I-95. I'll get a room rate at 155 for the meeting. That will be available probably starting Tuesday if you want to book. It is a great time to be in South Florida. So breakfast, lunch, and dinner on Sunday, with dinner being on my boat, Stocks and Docks Yacht. And then Monday would be breakfast and lunch, 2 packed days of education. My good friend John Person has a meeting in town as well. His is on Friday and Saturday. I like to run mine back to back with his. So separate fees, but you can knock off 2 meetings with one set of airline tickets. For more information or reserve your spot, please let me know. Jeffrey Scott at marketmripro@gmail.com. Know your news and earnings dates. So very different than last week. Factory orders on Monday, trade deficits, PMI, ISM on Tuesday, nothing on Wednesday, jobless claims and productivity, and a Fed head speaking on Thursday and Friday, nothing. Last week was a killer. Yet you had PCE, you had a Fed meeting, you had the monthly unemployment. And I think what really spooked the markets was the horrible performance on the monthly unemployment. I don't think anybody was surprised that Powell didn't cut. I think they were surprised that he sounded a little bit more hawkish um, than he has in the past few meetings where he didn't even talk about cuts. However, it really was when we shit the bed on the number of jobs created that I think the market is now starting to worry about how soft of a landing we're going to get. As you can see on the right-hand side, there's massive earnings again. Gosh, winners are getting treated like gods and losers are getting treated like the devil and going underground. You have to be on the right direction on these earnings plays or you should step aside. high risk. If you have lots of profits in a position, go for it. But these been tough. Look at what happened with Amazon. It wasn't even that bad, and they always um, are lightweights when it comes to projecting the next year. That's their quarter. But stocks are getting punished. The E index, this is one of the things that would be contrarian to this market going down further. It bounced off the 50 and held. As long as it holds up here, it's hard for me to believe if the leaders are holding. Oh, excuse me. But if the leaders are holding, it's hard for me to believe the market is tanking. So we'll have to see what happens there. And again, my meetings October 27th and 8th, marketmripro@gmail.com, onto the charts. So very quickly, just to review, this is just going to look at the one-day closes, and you could see all the major indices that we follow here were down. Bitcoin was down 3%, which was big. Russell was down 2, 1.9, just about 2 on the Qs, 1.6 on the spiders, 1.2 on the diamonds. It was a rough day throughout the markets. If you look at the week that we just finished, you can also see that everything was down 2 to 4% or more on the week. Um, Russell led to the downside 4.2, and you could see pretty much the indices on Friday finished in the lower third or so, except for the diamonds that bounced up to halfway, and Bitcoin finished at the bottom of the range. We have flipped to negative on the new highs minus new lows. That's kind of disappointing. To get a Hindenburg again, I think you have to be above 2.2%, 52-week highs and lows on the NYSE, and we're down below 2% on the new highs, so you're not going to get a Hindi even if the market continues to fall. One-day change, you could see on the S&P 500 sectors, the only things that were up were healthcare, staples, and utilities, and real estate was down a little bit. What got clobbered was discretionary, technology, energy, and financials. So we rotated, at least for the day, back into the very defensive plays of of the ones that led. If you look at over 5 days, the only thing that was positive was utilities, and I think they're getting a big bump by the energy producing utilities that are on fire because of the energy needs, the electricity generating utilities, because of the electricity needs of the data centers. And over here, very important, only 22% of the S&P 1500 was up on Friday, 23% the NASDAQ, and 24% the NYSE. So that to me just really reflects a weak market all around, and kind of obviously disappointing for the bulls. Now, if we look at the timing model, it's mixed. So I'd be putting out the yellow flag here, and we'll learn a lot more, I think, on Monday as the day goes by or overnight. You could see on the daily charts, we've gone to the daily timing charts, the spiders, the Qs, the diamonds, and the Russell. We've gone to bongo cells on each of the ETFs. That's not a good thing. And we've broken through the WMA on each of the ETFs. And on Friday, we went to a sell signal on the daily across the board. So we are at the minimum pulling back in an uptrend, but these are pretty significant pullbacks and has me a little bit concerned that we might see more. If we look at the weekly timing model, and we're just going to look at the band here, you'll see that the weekly timing model, and there's a lot of days we're looking back on this, so it takes a few seconds. The weekly timing model shows the horrible week that we had last week. And the weekly timing model pretty clearly shows that we are still long. And if we look at the monthly timing model, which is the really long-term timing model, it takes forever to turn. But on the monthly timing model, you're going to see, I haven't looked at it since Friday, but we're still long on the monthly. So we are pulling back in an uptrend. Now, will this be a small correction that we just finished of 2 to 4% and we rally back up to all-time highs? We could. Do we go down 6, 8% before we rally? I'd probably put my odds on that. Or do we have a big bear market coming? I don't think we're rolling over that much. In fact, what I think happens is I think we get an oversold pop in the next couple of days, and then we go back down to that 6 to 8% correction, and maybe that takes us through the end of September, and we rally on the rest of the year. But what do I know? We'll see what happens. I don't have a crystal ball. You could see on the daily charts, and we'll just take a look at a couple of them. I don't want to make this a repeat of what I did Friday. We do have some support here, and this will kind of be a natural place to pull back. And if the 50 keeps going up, we might just bounce off of this level and the 50 in the same range. That would make a lot of sense. So that gives us, a little bit more of a pullback, but not much, not more than another 1%, 2% at the most. This is the prior all-time highs, and it should be right here, and that would be in the same range that we might expect the markets to pull back to. Notice down here the volume on Friday was a high volume pullback sell-off, and we had an EMS, a gap volume breakout momentum, a PSAR flip, and the on-balance volume broke down. So a lot of reasons to be concerned about the markets, and we'll see what else happens. I'm not going to do the same thing on all of them. Just suffice it to say that the cash markets here, I think, show some significant risk. And you'll notice, as I've been talking about for the last several weeks, we're going into a period where seasonality at best is flat. Breakdown below the 17 on the Qs, natural target is the 50. We seem to be bouncing off the 50 on the diamonds. We'll see. If not, the 200's not too far. The Russell already broke the 200. So the Russell, which unlike the others, has not seen fit to give us a new high, had a major breakdown on Friday. Seasonality is not its friend. Where's the next level it drops to? Is it in here? I guess maybe in this range here of 206, another 4%, 3% rather. And then from there, maybe it drops down to here. So hopefully we'll get a bounce on the diamonds, but kind of look like they've, maybe they're getting oversold. We'll address that with some math in a few minutes. You'd expect volatility to be up. It was up 10 or 21.89% on the VIX futures. And make sure that was, yep. And then you could see the dollar, which has been rallying, and something that I'm a little bit concerned about because a strong dollar probably would be another arrow against this market, but we are way off the highs. Pretty strong day on Friday, like a hanging man doji. Is this thing going to run up to the 200? It already broke through this resistance here. I think that the 200 is a possibility. But again, although we're all going to be talking about the dollar going higher, it's still well off its recent highs. All right, commodities. If risk was off the markets, where was money going? Well, one place was gold, which was up big, 2%. Silver was also up, but not as much, only 0.81. Oil sold off some. I think the employment data would give consumption concerns. Natural gas is dead to me. And the big thing that we saw with the weak employment data, it's probably not the way we want rates to come down. But boy, the 10-year was down 3% and the 30-year was down was just under 2%. And they are well off the recent highs. And when I look at this 30-year, I can see it's had a significant drop now from the 5% level, which was concerning to me if we stayed there. The buckets show me an oversold market. So if I want to find a reason to think we're going to bounce because we're oversold, that white line or column, which is bigger than the gray, means it was bigger on Friday than Thursday, represents how many stocks in each index are below the bottom of the Bollinger Band. So we got 28% of the NYSE, 26 of the NASDAQ, 39 of the Russell 2000, boy is that oversold, and 36 of the S&P 1500. In a bull market, and what's important is the term bull market, this is getting to the levels where you'd expect to see the market rebound as people come in and buy the dip. In a bear market, and we're not in a bear market unless we've started one and we don't know it yet, in a bear market, they can get much, much more oversold. Market breadth, at the proverbial junk in the throat. In the market breadth of the first view, we can see that the NYSE on the left and the NASDAQ on the right both broke. What's interesting is that the NASDAQ hit all-time highs intraday right after the open on Thursday. So again, if we're going into a bad market, we're just at the beginning. The NYSE stopped like the Dow at the 50. The stocks above the moving averages are tanking, but don't think that we're at a signal level because we're not. This is where the signal level is. We're getting there. It could be 1 or 2 more days. If we look at new high, new lows, we know that they were negative on both, as were the AD lines and the up-down volume. This was an interesting development that we saw. The first one, I think, was on Thursday. We did not see one on Friday, and that is the Hindenburg Omen. You need 2 of them within 31 or 32 trading days to be confirmed. When it's confirmed, you have a higher risk of a big sell-off. There has not been a big sell-off in 100 years that was not been preceded by a confirmed Hindenburg Omen. The issue is, you a lot of these don't mean anything. Typically, you get a small sell-off or a flat line, but 1 out of 4 are the big sell-offs, so you got to pay attention. I talked on Friday about the importance of the 50 because when I look back at past Hindenburg omens, it's when we drop below the 50 that the market began its sell-off. Drop below the 50. So we are at the 50 on the NYSE. We're nowhere close on the NASDAQ. The other market breadth tool I have, which looks at one of my favorite tools, which is the 13-week new high, new low tool. And it's come down a lot, but it still has a ways to go, 0.15, 0.14, 0.10, 0.14. So those are the 13-week new highs and new lows. It's a derivative of the T2121 and Warden indicator that so many of us love. They don't tell you what market they do it on, so we've done it on in the upper left, the spider. Here's the NASDAQ composite, the Russell, and the S&P 1500. If you look at what's happened in the past, when you get to this level, markets rebound. So we haven't fallen off much. It's amazing how much these have fallen. So we'll be watching that very closely. So on the markets, I would say I feel we've got a pullback and an uptrend. My thoughts my thoughts don't mean anything. My hypothesis is that we're going to go lower. These have been tough months the last couple of years, but my hypothesis is that we get a bounce first. And so I think you'll have a chance to sell stocks and short them at a higher price than what they are right now. I don't know that for sure. Just after a move that we saw last week, we got oversold too fast. So you get a little bit of a rebound and then it takes the bigger drop. And that's kind of my expectation. If I look at the ratio charts to see what's happened, these are our S&P sectors versus the spider. Up here is Bitcoin. You see Bitcoin weakened. It's been up a little bit on the futures, about not even a percent. But you can see communications. I think that's called Meta. Staples turned up, defensive play, utilities turned up, real estate not as much. Technology's been the big stalwart, came down some. Industrials are strong. Um, you'll have strength versus the spiders even if everything's down. Some things outperform, some things underperform. If we go into the JAS layout, we can take a look at, are there certain stocks that look great? Things that I might want to go with, thinking about them on Sunday night before the market opens on Monday. That's a tough call. So I'm going to show you a couple of things that are interesting to me. I'm not going to go into as big a detail today because talk about top down, it's all about what the market looks like at the open. So a couple of things to the long side that I thought were getting into buyable areas. One of them was called monolithic power systems. So this is a stock, I believe the earnings came out on Thursday. Good earnings per share growth, a surprise. Good revenue growth, a surprise. It pays a dividend less than 1%, no surprise, it's a tech stock, but it took out these peaks and on pretty big volume, had an EMS positive, a CPR gap volume breakout momentum, coming out of a squeeze with relative strength and OBV turning up. Super duper expensive stock, but that one looks good. Let's just pull back, look at it on a weekly basis. It's had its moments here, but it's well off of its highs. Back to daily because I always forget to do that. Walmart looks to me like a breakout above this line will be enticing. Despite the markets being weak, we know they were weak, we've been talking about that. Walmart was up 0.5% on Friday. It has the magic, two volumes, two breakouts, but not two momentums right now. You can see relative strength and OBV have turned up. Um, Seasonality, a little bit stronger than that of the markets. Let's see when their earnings are. Earnings are in 3 weeks, so you got some time there. 72 cents versus 67. Not a lot of growth, but that's kind of where these companies live. I think a lot of it will be the surprise. Pays a small dividend, less than 1%. I think Walmart is setting up if it takes out that trend line. Now, the one that I always talk about how expensive it is this guy getting ready to run? Um, Notice that the relative strength and the OBV have hooked over their moving averages. Again, another stock that was up on Friday, up 1.37%. So that's great relative strength in a market that's selling off. Um, I think this is one that I'll be watching, and seasonality doesn't look so bad. It's neutral to positive. All right. Now, I think the theme here are big box stores or discount stores because BJ's, um, big uptrend, pull back to the 200, and look at this bounce it had and look at seasonality. So BJ's also looks good, up 3.85% on Friday. Its earnings are not till August 22nd. So that is one wolf pack, so to speak, that I think you can buy. We talked a lot about data centers. Here is a utility WEC that, boy, it looks like what a great looking chart. Uptrend, pullback, and a breakout, little pullback here, and an opportunity to buy it. If we look at the fundamentals, earnings were Wednesday with a surprise on earnings and revenue. It pays a 3.5% dividend. Um, this one's often linked to data centers. I think that one looks pretty darn good. WEC. Again, this one could go up even if the market goes down. It's one of those defensive type stocks. ENB, I believe is let me get the right one. Enbridge, I believe is an MLP. It's going to be a boring chart. It's not a growth stock. We're not looking for the world's best pattern. But I've got an uptrend, a pullback, a breakout above the 50. I've got breakout momentum, relative strength and OBV look good. But what I like about this guy, 6.28% dividend. It's got earnings. It has growth, although tepid, but big surprises. ENB is one that I like in that category. And then gold really has done well on this move here. And they're still trading up right now in the futures 12 points, despite the fact that the futures are firming and have turned a little bit positive. Here's on the smaller gold stocks, nice uptrend sideways move, sort of a cup, a handle, and potentially breaking out here. And that's Goldfields International. So those are some that I like to the long. If we look at my favorite scan, just drop in the 2-day momentum up. Let's put $5 and 500,000 shares, and I want you above the 200. Hit OK. I got two. Reddit. Wow. You know, shame on me. Well, it wouldn't have mattered. I was looking at this on Thursday because on Thursday it triggered the two momentum dots in a row, and I do get this before the market closes. Had gapped up. I knew earnings were coming, and lo and behold, it had a surprise of 136% and 850% increase. Next quarter is going to be 33 cents if they meet their number. Again, 16, so it's at least a 100% increase. We'll see if they don't um, get some kind of a surprise. Reddit looks great, but after this kind of move, you kind of expect it to pull back a little bit and give you a flag. And if not, it goes on without me. And then Savers Value Village, kind of a sideways move breaking out here. I didn't find it that exciting. It's a relatively cheap stock and it doesn't pay a dividend. All right. So, what I thought I'd end with today, because I'm not going to go into any great detail, is just to review some of the things that you can trade if this market does what I think it will do, is rally up, fail at some resistance, and then break down. And that's the break that I'm going to buy or short. So let's just, this is a list of 72 stocks that are contra ETFs. How did I get them? I Googled contra ETFs, and it took me to a page where they had a lot of, a couple of tables, and I cut and pasted the tables, and here we have them. But you can find something for everything. Now, what surprised me was I went and said, let's take a 2-day momentum up, and we're going to make sure you're above $5 and 500,000 shares traded. And we had a bunch of them. So let's start with the Dow, because you can get different varieties. Do you want 1x, 2x, or 3x? This is a 1x, I believe. And notice a big gap up on Friday right into the 50, a place that you'd expect it to see some resistance. This is what happened earlier this year. So if I look at this, I see a run up to 73, 74. I see us starting in the 45 range. I would probably feel better buying it above the 200, but when I saw those two dots, I thought maybe I should nibble a little bit. I still think we're going to go up first, so I might not buy it until we go up and fail. You can find stocks that are short the Qs. So SQQQ, similar pattern, does not have the two dots, only had one. You can find things that are short small caps. TZA, there's your two dots, relative strength and OBV turning up, did not make it above the 50. You can get things that are saying you to short, let's see, SOXS, shorting semiconductors. Not sure I'd be doing that in this market, but you actually had a couple of day move, and um, you had two dots in a row. So now you're probably thinking, why isn't this on my radar here? You got the shares, the dollar value, the volume, because it's below the 200. Did I put that in there? I thought I took that out. Other than that, is it below $5 in price? Nope. So I'll have to ask Praveen if there's something filtering that. I got Momo up $5 and 500,000 shares. And that looks like it trades millions of shares. Okay. So those are some of the things that I'm going to be looking at. So, and if you think energy is going to come back because the market's going to fall, there are lots of things you can look at. One's called drip. Drip will go up when energy goes down, and you can see the big move it had here. And if you think volatility is going up, you can buy something that does that. VXX will go up if volatility goes up. And these things can run hard. I like playing options, and I typically start with something that's a little bit out of the money because if this trade works, it's going to fly. And if it's out of the money, it costs less than in the money. So those are some of the thoughts for tomorrow. I'm not going to go deep into working up anything because I'm not sure what to tell you to do. I think you should have a long list available in case this market rallies. Expect that rally to fail and have a short list or a contra ETF list available for when that happens. Please think about coming to my meeting in Palm Beach. It is going to happen. I've already got enough people signed up that I can't back out. So I'd like to have some more. We'll see you on Monday after hours, and I will put a link for the sign up in the remarks section. Thanks, everybody. Have a great rest of the weekend and Monday. Sorry for my coughing.